Hey guys, Akil here. Welcome back to another weekend video. We're gonna hop straight into things today. No rants, just chart work. If you want to hear rants, I'm sure I'll have some more this week. I've been live streaming here on YouTube every Tuesday, Wednesday, and Thursday at 7:30 a.m. Feel free to join me for my trade of the day and some discussion on the news that's coming out, and again, usually a rant. But on the weekend video here, what I want to do is I want to show you my top 3 trading ideas for the week ahead. We're going to start at number 3. We're going to go down to number 1. And of course, we're going to throw in some nice trading lessons as well. So let's hop into it. Do me a favor before we get started. Hit that like button, show some love for this free video, subscribe if you haven't done so already. And if you have any questions about anything throughout the video, just leave it in the comment section below and I'll make sure to read through it and of course, give you an answer. All right, hope you guys enjoy. All right, so trading idea number 3 is going to come on the Canada yen. I'm here on the 60-minute chart if you want to follow along. And what we have in front of us is going to be an advanced pattern formation. Now, earlier in the week, or last week I should say, Canada yen put in a nice bear flag here. We reacted really well off of it, put in another retracement, and then came down to test previous structure lows. You can see right by our VS1 level here. And what we have setting up is a potential advanced pattern formation. When we get these ebbs and flows, especially in periods of consolidation, so areas where prices not really breaking major levels of support or major levels of resistance, we tend to see advanced patterns form most frequently. They form in all markets, in all different market conditions, I should say, but usually more in the consolidative state just by the nature of how they are formed. And what we're going to have here is going to be a potential bearish cipher pattern. So the high point of our flag right here is going to be our X, right? The ending of our breakout point is going to be our A. That's our initial impulse leg, so the starting point of our pattern. This first retracement up here is going to be our B leg. The extension down to previous structure looking left is going to be our C leg. And if we can rally all the way back up to our 786 Fibonacci retracement coming in at 91.52, that is going to be our decompletion. And of course, we work in zones. So the decompletion is going to start at this point and it's going to end at the X leg. And again, look left, structure leaves clues. That's going to be the same consolidative area in which we had our flag pattern, which should be a good battle in the markets, which is good for pattern trading. Forgot to mention this, but if you're new, I always kind of get caught up in the day-to-day stuff. This is a bearish situation, so you're looking for short entries within that zone. No types of continuation. Again, we haven't broken or violated structure to the downside, so I don't see any reason to think that we're likely to continue lower. So a normal counter trend trading opportunity. You can see some target ideas on your chart in front of you as well. Trading idea number 2 is going to be on the dollar Swiss. We're going to start on the daily chart and work our way down. Actually, we're going to start on the 4-hour chart. But the daily chart, you can see we're in a period of consolidation. Our most recent move was a move down to our lower VS1 level of structure support. The 240 gives an interesting lesson because if you ever join me in the live room, you'll hear me talk a lot about overlapping levels of structure and how this was one of the most important and probably expensive lessons that I learned in my trading career. But when we talk about overlapping or underlapping levels of structure, we're talking about 2 different structure levels that are very close to each other. So you can see we have a previous level of structure support down here. And if we look left, we have a previous level of structure support here as well. And you have to be careful when you're looking for trading opportunities or taking trading opportunities at the closest level of structure, because these are very tricky situations. And you can see this is a perfect example of how price came down to this previous level of structure support. We probed past it, actually touched the previous level of structure support looking left before rallying back up. And I know a mistake that I used to make, and you can let me know if you've been in the same boat here, is I'd be the trader that looks at that first level of structure support. You know, I wouldn't really look left for structure or anything like that. I'd work with whatever was on my chart. And I'd be the one that gets like a smart stop loss like right underneath this level. So I'd take the trade here and I'd be like, oh, I'll put a 10 pip stop loss on because 10 pips sounds good. I would get skunked out of the market and then the market would go on. And then I'd be in that situation where I feel happy about being right because I called the right move, but I was wrong because I didn't get a chance to take advantage of it. So that's one of the reasons, again, I'm pretty decent at identifying support and resistance after all these years. But one of the reasons I like to have these VS1 levels up on my chart, those are the green and red boxes I showed you. is just because they allow me to pay attention to things I may miss. So if I come into the chart and I'm having a lazy day and I don't zoom out, I see this big green box here and I say, hey, there's something important looking to the left. Let me zoom out. Oh, Akil, you should probably be more cautious here. So again, whenever you're using a tool in trading, in my opinion, tools should always be secondary. They should be things that you don't require, meaning that you can trade without them. I don't think you ever want to be locked into relying on an indicator or a tool, because if they ever were to go away, then do you have a skill, right? It's the whole give a person a fish they can eat for a day, teach a person a fish they can feed themselves for the rest of their lives. But I do think if you're using tools or having someone create tools for you, they should be things that assist you in your trading, things that can either, like a second set of eyes, or things that make your analysis easier. It's things that allow you to do the same thing but quicker so you can preserve time. But anyway, nice hold of structure here in the dollar Swiss. The key balance level, or the key point that I'm paying attention to here in this pair is going to be right here, right? This little retracement. If we can violate this level of structure to the upside, we are likely to continue higher back up into this zone right here. So that would offer a nice buying opportunity from here to here. A secondary target would be right up here, right? And of course, secondary target, you can take all off at the first one, you can take all off at the second one, you can split them. That's all going to be up to your personal plan. So I guess the first level that would be on my radar is right around here. The second level that would be on my radar is right around here. So again, if we can violate that level, meaning I want to see a break and close above that level, there's a chance for a good buying opportunity. Now, this brings up a good level, or good point as well. It's just having a conversation with one of our traders on Instagram about this, who was looking at different time frames, daily, 4 hour, and hourly, and he'd look at one and see a violation on one, or a hold on one, then you go to another and you see a violation on another, then you go to another and see something else, and he was getting a little bit confused about, hey, Akil, as I keep going lower, I keep seeing levels get violated that weren't violated before. So can I count them and take trades off of them, or can I not count them? And we had a discussion that basically said, if you're going to use top-down analysis or multi-time frame analysis, whether it's a 3 time frame, a 2 time frame, it doesn't matter. You want to be consistent, and you want to assign rules to what you're using each time frame for. So what is your daily time frame for? Is it just for observation? What is your 4 hour time frame for? What is your hourly time frame for? Which time frame is used to identify violations or holds of structure and trends? Which time frame is used for you to look for your specific reason for entry? And again, it doesn't matter what you use each for, but you need to define them, because if you don't, you're going to be all over the place. You're going to be in that situation where you'll end up hunting and finding whatever you're looking for, where you'll have something on one time frame, but you're pissed off because you can't get involved. So now you sneak down to a lower time frame and it gives you what you need, and now you can take it, right? That's not a good habit to have. So make sure you define what you use each time frame for. That way you can stay consistent in your analysis. And you guys know my little saying from now, or by now, right? Consistent analysis plus consistent execution equals consistent results. Now, real quick, before we get into our number one trading idea of the week, I want to do a quick plug. The Trading Coach podcast. If you're a podcast listener, you haven't heard it already, I have one. We're approaching episode 600. Just want to say a massive thank you to everyone that has supported the show thus far. We were actually ranked, I think, the number 6 or number 7 top-rated trading podcast this past year, which was pretty cool. But if you haven't watched it or listened to it already, check it out. Pretty good content. It's content that is aimed to help you as traders. The questions, the topics are from you. So it's a for you, by you type of podcast, as well as some stuff that's on my mind as well. Not just trading related, but personal development, entrepreneurship, all that fun stuff. So check out the Trading Coach podcast. It's available pretty much everywhere you listen to podcasts at. And we do 3 episodes a week, every Monday, Wednesday, and Friday. Check it out. All right, so my number one trade of the week is going to be a repeat offender. You're going to see this a lot because a lot of these longer term trading ideas, they just don't play out every single week. They take time. But we're going to go back to the NASDAQ. And if you remember this from a few videos ago, or maybe last week's video actually, we were looking at a hold of this consolidation, right? Price came down to the lower level of structure support. We put in this beauty of a candle right here, and that was a very good sign for buyers. And I think what I said in the video last week was, if we get that higher high higher close on the next bar. That would be a very beautiful 3-bar reversal. And I apologize. It may have been the weekend video. It may have been one of the weekly live streams. I don't know. But I know we did talk about this on YouTube or in public. But I said if we got this higher close, that's an excellent 3-bar reversal. We even went down to a lower time frame and said, hey, if we can violate, what was it? Kind of similar to the dollar. So if we can violate this level right here, that's a good sign for a buying opportunity. Well, we did not get the follow through yet, but it doesn't mean the opportunity is done. I think another problem that many traders have is impatience. They expect that when they hop into a move, the move has to happen right away. And if it doesn't happen right away, they get fearful and they start sabotaging their trade. Oh, it's not going to happen and it's going to, take me out, and they bail on it. That's not the case, right? A lot of the good moves in trading take time to develop. And something that I always do to kind of keep myself mentally sane is I ask myself, has anything about the trading opportunity been violated, right? So if you're trading something, you should have, we go through entry, stops, and targets, right? Your stops, in my opinion, should be at places in the market where the price chart invalidates your idea. So for me, if a violation of structure would be a clear sign that, hey, Akil, you're wrong, you're probably going to lose, right? And so you can mentally prepare yourself for a loss, or maybe do some graceful exit stuff where you kind of cut your losses and fun stuff like that. And you look at this chart, right? If our violation level is the low of this candle, because that's what we need to have a lower low, lower close, has the market done anything to make you go crazy? Like, no. If anything, it's given you more confidence, right? We've retraced down with a very high momentum bearish candle, this big red sucker right here. We continued that the next day, right? We pressed lower and we did a few things. One, we refused to even test the lowest lows, right? So the sellers couldn't have this, or they didn't have the same amount of strength as they did before in this test. And we closed at the very high. So we closed with a very positive candle. So now you have a double bottom at a previous level of structure. You've got two beautiful candles down here for your first bottom and your second bottom, right? You can look at volume. Volume on the second candle is much bigger than this high momentum red candle. And look at the range. So what I mean by range is that you look at the size of this candle right here, this red one, I'm sorry, right? Boom, right? Remember those numbers. You look at the size, you probably even need to do a ruler. You can just look at it with your eye test, right? You look at the size of this green one, a lot smaller with a lot more volume. That's an anomaly, right? We can tell which side of the market the volume is on by understanding the candle and reading the candlestick. We know that it's on the bullish side. That's a positive sign. We also have RSI divergence as well, right? You can see the RSI down here. Sorry, my things are getting in the way, but divergence on the RSI as well if you want to add that. So it's not a negative sign at all, even though it may scare a few traders away. So same trading idea as last week here. If anything, you get a better entry, right? The 3-bar reversal entry would have been up here. You get a better entry now because that's a lower point. All that does is decrease your risk, increase your reward. That's a win-win in my book. Hope you guys enjoyed the video. I don't really ask for much aside from a few things. On your way out, hit that like button, subscribe if you're new, and if you want to leave a comment, feel free. It could be a comment just saying you love the video, or it could be a question about something that we discussed. Also, I do a live stream every Tuesday, Wednesday, and Thursday here on YouTube, 7:30 a.m. New York. Join me for my trade of the day, usually a little rant as well, and I'll see you then. Until next time, plan your trade, trade your plan. Take care.